Hello, everyone out on Zoom land. My name is Donna Fletcher. I am the Manitoba and Nunavut Councillor, as well as the first Vice President of Equity Council. And I am so pleased to welcome all of you to this really wildly, vitally important workshop designed to help all of us as artists learn some fundamentals of finance and how to start building our financial technique. We have dance technique, we have acting technique, we have vocal technique. But as artists, we need a comprehensive financial technique. I'll also be acting as your moderator today, fielding questions from the chat and giving them to our knowledgeable expert, Chris, to answer. But before we begin, I'd like to welcome each of you from the Winnipeg Nunavut region, which is where I am, the home of the Anishinaabe, the Cree, the Oji-Cree, the Dakota, and the Dene peoples. We are Treaty 1 territory and the heartland of the Métis Nation. We acknowledge that we are today creating and gathering on Indigenous land, and in appreciation of this land and what it provides for all of us, I'd like to acknowledge and recognize here that our water in Winnipeg is sourced from the Shoal Lake 40 First Nation. Okay, then I would like to read our equity statement of affirmation. Before any equity event, we really love to read this affirmation to show what our association stands for. So, equity embraces an open and inclusive environment, and we encourage respectful behavior that affirms the dignity of all individuals. Equity further recognizes our shared responsibility for vigilance in creating and maintaining this environment. Equity recognizes a shared history with Indigenous, First Nations, Inuit, and Métis people in Canada. And in honor of those who have gone before us, equity commits to working toward understanding and actionable practices of reconciliation. So there you go. Welcome, everyone. This is our 10th in a series of workshops and seminars that Equity is proud to bring to you on topics of great importance to our members and our industry at large. Equity gratefully acknowledges the Government of Canada for the funding of these incredible programs through the Department of Canadian Heritage as part of the Canada, sorry, my cat's wanting to get on screen here, sorry, as part of the Canada Performing Arts Workers Resilience Fund. After the workshop, we'll also be sending all of you a link to complete a brief survey about this workshop today. We really want your honest feedback on these workshops and your guidance, because it helps us as we move into the future and plan future ones. And please always feel free to give us ideas of things you would like to see that maybe we haven't covered yet. As usual, if you have a question, I encourage you to use the raise hand option or put your question in the Q&A section. And also I'll be monitoring the chat. So if that's easier to use, please do that. But just know that sometimes the things in the chat get lost if it goes too quickly. And now I would like to introduce Chris Enns, who is our wonderful facilitator today. Chris is a certified financial planner and former opera singer. He spent 10 years as a performing artist and learned the hard way that ignoring money doesn't really work well for you. He's the founder of Rags to Reasonable, an advice-only financial planning firm that specializes in working with creatives and people with other non-traditional financial situations. So I am thrilled to have Chris here. I've known him for a long, long time, and I'm so excited that he is going to bring his wisdom and his light and his wonderful grasp of financial literacy to you all today. So Chris, I will hand things over to you.
Thank you so much. It's wonderful to be here with you all today. I hope you're all well. And I think the first thing I always want to add to my bio and introduction a bit is that I did not grow up being somebody that always understood this money stuff. I don't have a brain that naturally works in formulas and spreadsheets. I really was a person that ignored money as long as I could possibly ignore money. I was the person who, if it came up in a room, I would find my way out of that room, it was something that made me feel like everybody else understood this stuff, and it was only me that really felt like I knew nothing. It made me feel stupid. It made me feel small. It was one of those things that I just really didn't want to engage with. And I had this idea that I'd figure it out at some point. I must figure it out at some point. I'll figure it out when I make money, when I ... So as I started kind of moving through my career, the thing that I realized more and more was that, most of the lessons that I learned, I just learned from making big mistakes. So a couple of the highlights are, tanking my credit, shopping at Moore's Clothing for Men. I was getting one of those sweet store credit cards, as you do, $50 off on these wonderful V-neck sweaters that I was buying. And then I forgot about it, and I forgot to pay it, and I was never checking any of those things. So anyways, that took 7 years to fall off my credit report. I got into a lot of trouble because I avoided going to the dentist. I mention this because it's this fun thing where you pretend that the pain will go away somehow. But there's a wonderful theme in finances that avoidance is expensive. And cavities became root canals, became infected root canals, became a lot of dental debt. But it wasn't until I started with my first job kind of out of school. And I was working at the Canadian Opera Company, their ensemble program, and I was making a weekly paycheck, which felt like riches at the time. And I realized that making more money, all it did was amplify my current behavior. It didn't change anything. I just did the exact same things I was doing before, but a little bit more expensive sweaters, always add guacamole, 2 drinks instead of 1. And when it came to tax time, I did my taxes using an online software, which is totally fine. And I made some mistakes, which is also fine. You don't go to prison for making mistakes on your tax return. But when they started to call, I ignored those calls. And then they sent the letters that got more brightly colored, and I ignored those letters. And when that became thousands of dollars of tax debt, I started to look at this and realized that ignoring it really wasn't working. And so I started to look at this part of my life. And the big lesson when I started to look at finances was it was different than I thought it would be. I think that often the way we frame money and finances is like this problem to solve. Like, if only I could do my money, if I can just figure out my money, like if I just sat down this weekend and just did money stuff, I'd never have to think about it again. And I so wish that that's what I was pitching you today. It's just like, sit down next Saturday, only money, never think about money again. But that's not what this is. Finances are way less this math problem to solve, and way more like a craft. And there's a good news and a bad news thing there, is because as artists, we know craft. It's something familiar to us, but also it means that nothing is going to happen right away. It's going to take time. As much as you may enter, your teacher's studio and say, "Oh, I want to do this this really hard aria or this beautiful piece," it doesn't mean that you can do it on the first day. It just means that it's going to take time to get where you're going to be there, where it's going to take time to get where you want to go. So what I want to talk about today is, because I know that we're all going to be coming at this kind of from different perspectives. And some of you might be really comfortable and some of you might be super stressed. Actually, Randy, if you don't mind, we kind of had a little bit of a starting poll just to see how everybody's stress level is kind of entering into this money conversation. So if you don't mind just kind of answering here, the sense of how comfortable are you feeling with your money right now? So know that I definitely would have been on the stress end of the scale before. There's no right or wrong answer, just kind of getting a sense of where everybody's at as they're coming into this moment right now. Okay, great. Perfect. Here, I'll share the results. So lots of kind of the majority of us feeling more on the stressed to overwhelmed, with some people feeling like it's their jam and some people feeling pretty comfortable, which is great. I think one of the great things and how we want to start talking about today is I want to really talk about this idea of looking at a financial technique, because when we talk about building a craft, I think at the core of that is having this technique. And the great thing about a technique is that it doesn't mean that you don't get sick on opening night. It just means that you have some kind of tools to reach for when that happens. And the cool thing about a technique as well is that it's bound in these ideas of fundamental things. No matter how long I sing, I'll come back to my teacher and I want to work on this really hard passage. And what do we work on? Breathing. We come back to the same fundamentals in music, in acting, in dance, over and over again. And in finance, it's the same way. So whether you're somebody that's trying to figure out, 30 years from now, or you're somebody who's just trying to figure out how to get through next week, what I want to talk about is the financial fundamentals, the things we come back to over and over and over again. So hopefully, no matter where you're at, you'll be able to find something in here. Please kind of echo what Donna was saying about questions. Feel free to kind of add them to the chat as you go. I have a firm kind of try to leave no person behind idea. So we don't want to leave anybody behind. If you have questions, just ask them. There's no bad questions. There's so many of us that are feeling like everybody else understands this. So please kind of have permission to do that. And we'll look at these fundamentals, and hopefully that'll kind of give you something to take away no matter where you are and kind of what you're working on.
Chris, we've had our first question come in,
sure.
which I think you might address as you go, but I just want to put it out there.
No problem.
Is there a form for when I fill my taxes and add things that I have as an artist, like gas, Netflix, supplements, etc.?
Yeah, so I could kind of ask, we'll talk about taxes in a little bit, so we can kind of return to this question a little bit. But when you say a form, do you mean like something to organize with, or do you mean something to kind of like actually file your taxes with? So I'm just going to leave that question for you to maybe add a little bit more information, and we'll definitely return to the tax side as we go along. Okay, a half answer. Excellent start, Chris. So fundamental number one, and I really like to look when we start talking about the fundamentals, I like to think about them in terms of questions, the big questions that we ask over and over and over again, because the nice thing about questions is that they stay the same, even though the answers will constantly be shifting as you change, as what you want to do changes, all these things. And the first question really has nothing to do with numbers. So that's a nice thing. And it's, what is your money for? It's really tempting, especially when you're kind of in a high stress situation, to try to skip past this question and be like, just help me figure out how to get through this week. But it's really important that we start with this idea of what is my money for? Because for a lot of us that got into the arts, we didn't do it primarily to maximize our wealth potential. And I don't say that because you can't make money in the arts, then we can't do well. But I do think that most of us, that wasn't the number one thing we were thinking about. And so saying that you're going to do this money technique for money's sake isn't the best thing. It's me like trying to sell opera singing, saying you're going to be able to sit in front of the mirror and you're going to do tongue exercises to try to figure out where your vowel is. Is it here or here? It's a terrible way to sell an art form. So this, why would you even care enough to do the technique, is really important. And it's going to be different for all of you. So I want you to do a little bit of an exercise to kind of kick us off here. Grab a piece of paper or something to write with or type with or something like that. And I want you to take a minute, think through this question of, if I had all the money in the world right now, what would I spend it on? So it can be everything from like really little things like the most beautiful towels or nice sheets or like a gorgeous pen, to as big as you want to imagine. You can go with island chains or the moon or however you would like. But just kind of to start with, kicking off, you have all the money in the world. What are you spending it on? So write down, I'm going to give you a minute to kind of play around with that idea, and then we'll check back in. So take a minute, write down what comes to mind. Randy said, definitely feel free to throw some things in the chat if you feel comfortable. Okay, so you can kind of keep working on this a little bit. This is one of the first things I want to encourage you to take into this next week. So just to kind of have this running list a little bit. And as you move through your life and through your day, be like, oh, you know what? I would get, really nice frying pans. Or, oh, you know what? I would get a car for my brother. Or I would get just let that flow a little bit. So for some of you, you might find this exercise really easy. You could go on for days. And for some of you, you might have written 2 things and then gotten really stumped. Everybody's different, but just kind of encourage yourself a little bit, because this is one of the ways that we can answer this question, and that's through the language of goals. So trip to, I can't think of any countries right now and put on the spot, but a trip to a place you really want to go, or a wedding, or college funds, or, buying a house. These are great examples of goals, and planners love goals. The great thing about it, we can put a price on it. We can put a plan around it. We can figure out how you're going to get there. It's lovely and tactile, and it can sometimes not be that helpful, because the problem with goals is if it's so big, or it feels like the price tag is so large that you don't feel like there's a pathway to it, it can become something that's not actually very encouraging. It can be something that's demoralizing, and another way to kind of beat yourself up for falling short, which is finance is really, really good at kind of giving you reasons to do that. So goals is one way, but another way that we can look at answering this question is through the language of values. So I want you to take a look at the same list you just wrote, and I want you to ask yourself, why would that make the list? Why is that something that you would be interested in, given all the money in the world? And start thinking about kind of broader type words, value type words. So it could be about family, or creativity, or success, or pleasure, or kindness, or helping the world, or whatever these things could be. Why is it something that's interesting to you? So go through that list, and if it's multiple things per item, that's totally okay. Just kind of start coming up with the idea of some value type words and start making a list around that. So the question is, why would that have made the list? I'll give you another minute to kind of think through that. And feel free as well, as you kind of go through, drop some of those value type words that kind of seem to resonate in the chat. Hmm. I love that. Lots of really, really good words coming into the chat. This is the second part of the exercise I want you to carry on this week. So going back and forth to be like, well, why would new frying pans be interesting to me? It could be about comfort. It could be about community, hosting people. It could be about trying new things. It's a lot of ways that these like mundane things, you go back and add value lists and all these things. So creating these big old lists of things that money could be for in your life. And then I want you to make it a little bit harder on yourself. I want you to add to this question of what is my money for, the words right now. What is my money for right now? One of the first hard things that we need to look at when we look at money is that we have this finite resource. And it's really tempting to say things like, oh, when I make $80,000 a year, or 120, or 60, or whatever that number is, I'll no longer have to decide between this, this, and this. But what I'm here to say is that there will never be enough to do all the things. Not because you won't make money, but because your ability to dream is always going to outstrip your ability to fund those dreams. You will always have to look at this list of important things and say, what gets fed first? And one of the hardest things is when money feels like it's pulling us in 1,000 different directions. So the thing that I want to encourage you to do is take this list, and whether it's goals or values or a combination, start making yourself a top 5 list. Out of the important things, what gets fed first? It's a hard thing to do. There's no gimmies here. These are all things that you really want to do. But right now, not for all time, and however you want to define right now. So that could be this month, it could be this year, it could be 6 months, whatever feels like an amount of time that you can fit within your brain without it wanting to explode. What is your money for right now? Coming up with this list. This is such a helpful thing because when we look at money, it's so easy to get gravity welled into somebody else's idea of success. What I want you to try to do is to create your own framework for financial success. What is good spending to you? What is bad spending to you? So that you can kind of try to create some kind of framework. And, that doesn't necessarily mean that there's, you can find these little things even within the day-to-day spending that happens. I'm not saying that like this is all, ease and rainbows and everything is going to go towards the things you like. Sometimes your phone bill is just your phone bill. But there may be opportunities within these things to say, oh, I feel bad about spending on art supplies all the time, but creativity is really important to me right now. So I need to carve that out a little bit. Or you might find that family is really important. And that's something that's always kind of like, there's never money for that, or giving, or whatever these things are. There has to be some way to kind of start solving that problem so that that framework is still really helpful, no matter kind of where you're feeling in terms of of how much kind of is available right now. So my first encouragement, that what is my money for right now? First big question.
Chris, there's been a great question here saying, how do we do this list as a couple?
That's a great question. So I would encourage you, first of all, do it separately first, because it won't always line up. And that's okay. It doesn't have to always line up, but it can be really, really good information. Finances add some extra complication when you're in a couple because there's a whole other person who wants to do not always the same things. So noticing where it overlaps and where it maybe doesn't overlap can be really, really good information for you around why that person might be spending in a way that doesn't quite make sense to you, or kind of feels like it doesn't, it kind of having a sense of what the other person's priorities are. And then a sense of talking it out, having that conversation about what are our joint priorities, what are things that are separate but are still important. I think that's the way to start that exercise. I'm not saying there's an easy way to resolve it all, but start by doing it separately and then come together and start having that conversation about where it overlaps, where it doesn't overlap, and what's a kind of goal. What are we moving towards together? What are we moving towards apart? And how do we start kind of thinking about how that frames our collective financial success?
Another great question that came in is, any tips for handling finances when one person isn't an artist in a couple?
Sure. I think that we're going to come against that a bunch. It really depends so much because artists aren't one thing when we thinking about money. I know we have this one idea of how artists think about money, but that's not true for all artists. Some artists are spreadsheet wizards and they think about things really analytically, and then some prefer not to, and that's good too. So it depends who your partner is. I think that once we start getting to the brass tacks a little bit about this idea of how income actually works and expenses work and all those things, that's where some of the practical things come to play. But let's kind of, maybe if whoever asked that question, maybe we could come back to it at the end and just kind of see what you're so curious about as we kind of lay things through. Because I think it's a really good question, but let's kind of keep on talking and see where some of the more specific kind of areas of friction might be. Okay, Donna, any more questions before we kind of move on a little bit?
No, we're good, I think.
Okay, great. Awesome. So let's kind of move on to the second big question. So we talked about what is my money for right now, and starting to kind of have this idea of what's my top 5 list? How do I start kind of prioritizing and building the sense of financial success? The second thing we're going to look at is the question of what do I need? So now we have to look at numbers, but to be fair, we're 26 minutes in and we haven't talked about numbers yet. So you have to give that's pretty good. Unfortunately, we have to start looking at numbers a little bit. And one of the big things that if you're an artist and self-employed, and if your income is not the same every month, you may have tried to Google how do you make a budget, and it may have said something very helpful like take your monthly income and divide it by 12, and you were like, flows. For those of us with variable income, things that change throughout the year, income is a really hard place to start when we're trying to figure out where we kind of stand in the financial space. What's the better place to start is the expense side of the coin. So I want to look at this question of what do you need? And the way I define need is I don't have a lot of, the way I think about money, I don't think about needs and wants and like the difference. And if that works for you, that's great. But in general, I just mean like, what does it take to run a happy, healthy version of you? That's what I mean by need in general. And so how I like to think about it is I like to put expenses into 4 piles, and I'll explain what they are, and then I'll pop up a slide, and we'll kind of look at that visually and talk about kind of how to start building some numbers around that. But in general, the first idea is that I want you to put your expenses into 4 piles. The first one, fixed expenses. What is the same every month? This is a bastion of security in an unsecure world. So the same every month. We're talking about rent or mortgage. We're talking about any subscription costs. We're talking about anything that happens the same every month. First pile. Second pile is what happens every month, but the number's not the same. So food is a great example of this. So sometimes it's, this amount, sometimes it's this amount, depends what happens the week, but it always happens. So, groceries, eating out, takeout side of things, transportation could be gas, could be a transit pass. Now a transit pass might be a fixed expense if you buy a fixed transit pass every month, but if you go more kind of tickets and it's more kind of variable, then it might be a second pile, happens every month, but the amount changes. So fixed expenses, and then happens every month, but the amount changes. Third pile is the oft ignored, happens every year, but I don't know when it happens. So like it could be the subscription that happens once a year. It could be the like clothes, which happen at some point during the year, every year, but not reliably, or gifts or travel, like those spiky things that we like to ignore exist. And then they come and slam into our budget and ruin everything. Annual expenses. And then the fourth one, I call it business. You could call it craft. Either of those things work, but this idea of like in your craft or in your business, what are expenses that are specifically for that? So they could be about website costs or material costs or lessons in coachings or union dues, anything like that. That's kind of what we put in the fourth big pile. So let me pull up a worksheet here so we can kind of take a look at that. Here, I'll make it a little bit bigger than it is right now. 1 second. Okay. Can we all see that worksheet here? I'll let Donna tell me if for some reason everybody can't, but I'll assume you can. So we have the perfect. So this is just a way to organize. We've got our 4 piles, but we made them the 4 columns. And this is kind of a starter thing. And I'm going to drop a version of this into the chat so you can download a version as well and play around with this a little bit. But I just like, this is how you can start organizing things when we're looking at expenses. So in the first thing you see are fixed expenses, then our monthly expenses, annual, and then our business expenses. So if you're doing this for the first time, here's where I want you to start. I just want you to start by identifying the things in the pile. So words first, numbers later. So start by just kind of going through and being like, what do I spend money on? What's not in this kind of column that I spend money on? Don't start with what you think you should spend on. One of the biggest problems when we start to do this kind of exercise is that we cut in our brains, or we try to make something that we want to like look good to like the specter of the accountant over our shoulder. This is way more like an artistic exercise. Consider it mirror work. This is like, it's got to be true in order for it to matter. I think our brains know when we write down numbers that are not true. And then they just sign up and they're like, I don't need to deal with this. So what you want to do is like say, what's the truth of what I spend right now? What do I need? What's in all these categories? So start with the words. You can go through a worksheet like this and just kind of stroke things out as you go through, or underline things, or however it is, words first. Then start building some numbers. So some things, whether you know them or not, they exist as numbers. So fixed expenses is a great place to start. Start collecting those things. So what's my rent? What's my internet bill? What's my vehicle payments if I have vehicle payments? My bank fees. You may not know that off the top of your head, but you may like just kind of start putting that in. Gym membership. What are all the subscriptions that I'm subscribed to? Maybe I should check my app and just kind of see what all those things are. Start collecting all the things that are the same every month. Now, when we get out of this, we start to get into the realm of Chris, I don't know what I spend on food. Sometimes it's this, sometimes it's this. And if you're a person that loves the idea of going through 6 months of spending and all your statements and adding it up in a spreadsheet and coming up with averages, I bless you, go forth and do this, come up with wonderful data and fill these numbers. If you're a person that is never going to do that, and that's not something is ever going to happen, allow me to pitch you a different way to start coming up with some of these numbers. And that's just to come up with good, thoughtful guesses. But I don't mean just writing down the first number that comes in your brain. Here's what I want you to think about. So for something like groceries, instead of just writing down a number that sounds ish, right? I want you to really think about this as a life problem and not a math problem. So really think about, like, how do I shop for groceries? Do I do like one big shop a week normally? Okay, let's say that you do one big shop a week normally and it's about $100. I'm not saying that $100 is correct. I'm just trying to make the math easy for myself so I don't embarrass myself by doing bad mental math, which I probably will do in front of you in anyways. But $100 for your big shop. Great. So we know we have big shops are about $400 for the month. Now, what else do you do? Do you go to like a bakery every month, or like pop into a bakery or like a health food shop or something like that? Let's say you go pick up bread and buns. It's about $20 a week. So let's add an $80 from that. $20 times 4. We're not too worried about extra weeks. We're just trying to kind of get close enough. And then let's say once a month, you go to a health food store and you buy that like really good vegan cheese, and that costs another $100. So we built a number that's about $580 for groceries. Is it true? I'm not sure, but it's based on what you actually do. And then what you can do is start noticing when you go places. This is where numbers can really help, because when we don't want to put a number on things, we end up saying the same 3 things over and over again. Just want to spend less. I just want to make more. And I just wish I had enough. But the problem is that those are 3 unsolvable problems. Less than what, more than what, and how much is enough? So if you're starting this, even just by putting kind of like your flag in the ground on a number, I think a big shop is $100. The next time you do a big shop, you're like, ooh, that was 130. And that felt pretty normal. Okay, so let me go back and alter this. Remember, it's craft, not math problem. The other cool thing about this is when you start thinking about things as a life thing versus a math thing, when you look to say, I would like to spend less, you have to think, like, what am I going to do different? So you can't just changing a 580 to 480 on a piece of paper, easiest thing in the world. I've reduced my spending, but it doesn't give you any information to take into your life. What are you going to do differently? When you kind of start thinking about a thoughtful number and what's behind that idea, all of a sudden you can say, like, okay, well, shoot, like maybe if I went to the bakery less, or if I didn't do that thing, or if I tried to have my bill be closer to this in here, it gives you more information in the real world to start building those numbers. So, and you can take this into all kinds of things. So you can take the same thing into something like gifts is a great example. So instead of just like writing down $500 for the year on gifts, sit down and write the names of the people that you buy gifts for. Go through it slowly, just be like, who do I buy gifts for? And when do I buy them gifts? Do I buy them a birthday gift? Do I buy them a holiday gift? How does that work? About how much do I want to kind of spend on them for each kind of thing? And then build a number from that. And then all of a sudden, you're framing the problem in a way that feels way more real. It's not, I should really spend less money on gifts. It's, who's not getting a gift? Like, what's this actual decision that I need to make in order to do this thing that feels just like a math thing, but actually is more complicated when it kind of comes in terms with what I actually do in my life and what I want to be able to do. So filling these numbers with your life is how I want you to start building the things out, and then just shifting them as you get more information and kind of engaging in this idea. Filling out a sheet.
We have a couple
Oh, yeah, no,
questions.
please, Donna, please interrupt.
The first one is, could you please put the link for this up into the chat?
Of course I can. Yeah.
For this form, because it's a great form.
Yep.
Also, someone said that RBC gives you stats on your spending, and it's already included in the banking app. And they're not sure if other bank apps do this, but it can even give you a 1 week, half month, and full month stat. So that's exciting. Then the last question is it important to keep the bills for all of these expenses? And that's where we are right now.
Great. Okay. First of all, I'm dropping the expense worksheet into the chat here. There's two versions of it. One is kind of for the whole year to think about annual expenses. But if you're, again, somebody whose brain is like, I can't think about the whole year because I don't know what's going to happen, there's also one that just encourages you to think about the next 3 months. Also fine. Either one is fine. Again, we're working on craft, not like absolute, this is the right way to do this kind of thing. The second question about, or the second comment, which is great, bank apps do have better kind of like feedback in terms of how they're, in terms of how they're separating and categorizing spending, which can be really, really helpful. The thing that I think that can be difficult for some people, if you have a credit card with another bank, or you have a bank account here, you have multiple places, it can get hard to kind of see what you spend holistically. And so sometimes those are kind of partial numbers, or sometimes they give us feedback, but we never look at them. So it can be a really helpful thing when you're kind of going through an exercise like this to say, oh, is that true? How does that meet with these kind of numbers? The last thought that I'll kind of do is that sometimes past is good information, but doesn't necessarily kind of provide the information we want going forward. For example, like if you're trying to figure out a name, like how much do I want for travel over the next year? Well, what trips are you thinking about for the next year? Going back is really helpful, but might not just be I'll do the exact same thing going forward, because it really depends, like, what am I trying to do? What do I want to do? What do I want kind of like, what do I want to exist? So just kind of encouraging you to kind of still interact with those numbers, ask questions and figure out how they kind of fit in your life. The last thing, the question about, do I need receipts for all of these things? We'll talk about this a little bit in kind of the tax section, but no, not necessarily. You don't need to keep receipts for things that you don't want to look at deducting or writing off for your taxes. So it's really this question of, we need to keep a record of the purchase for something that we want to claim on our taxes. Really, really important. We can kind of like show the CRA that, kind of tell a clear story. The other things, some people keep them kind of historically. Sometimes people have kept receipts in order to put that into their spending information. So if you're somebody that's tracking every dollar or something like that, that might be something that's helpful for you. But for taxes, you don't need to keep your grocery receipts unless that's something that you're going to be claiming on your taxes. So I used to keep every receipt because I was terrified. And then I'd have this giant pile at tax time. And I'd have to go through like 400 no-frills receipts. And that felt like just took a lot of extra time. So no, you don't have to keep everything, just specifically things that you want to claim. Helpful? Is that, well, let me know on the side if there's still questions around those things, or if that was helpful enough. As you're looking at that sheet, and I'll kind of flash it up on the screen quickly again, what I want you to do is start kind of filling out those numbers, but also once you kind of come up with your first version, I want you to start totaling them up. So for your monthly pile here, we total our monthly piles, and then we total our annual piles for both annual expenses and business things. And then I want you to add them up. So we add up the piles, and for these annual ones, we divide them by 12. So kind of like, this is per year, but we're imagining what they would be per month. And what that will give you is kind of a simplified idea of what the real cost of your life is when we include all the stuff. I think often, at least the trap that I was into a lot was, I had this number that was like my rent plus $200 for food. And I was like, I know I can live on this. But there was all this stuff I wasn't including. And so you're really setting yourself up to just be kind of hit out of the blue with this and this and this, which actually isn't as unpredictable as it feels like. So coming up with this average number of your life is a really, really helpful number to have rolling around in the back of your head. So let's say that number is 3,000. Immediately, okay, I know how much I need to get after tax kind of to bring home. This is what I need. Or if you have a lump sum, like a lot of us we'll kind of work for kind of a lump sum, and then we'll have dry periods. Let's say you have $6,000 in the bank. You're like, I know what that number means. It means I have 2 months of the average cost of my life. That's what that number means to me. Or somebody's offering you 2,000, but the gig's going to take 6 weeks. You'd be like, ooh, I know that that's less than I need on average, so I have to make sure that it's worthwhile on some kind of other frame. So it gives you a context to start looking at other numbers framed in what it means towards your life and your kind of average need on your side. Really, really helpful metric to start putting together. Does that make sense? Anybody have any questions about that? Okay. Feel free to kind of add them in as we go. If you're just kind of getting started, here's a couple of things to think about. So first of all, just start paying attention to your spending. So if you just look at this and you're like, wow, do I have no idea? It's okay. It's really easy these days with kind of tapping spending or things like that to have no idea what you spent on groceries or something. So just start noticing these things. If you want an exercise, you can say to yourself after you leave your grocery store, I just spent $130 on groceries. That's interesting. It's not terrible. I'm not a terrible person for doing it. It's just something that happened and I'm noticing it. Just start doing that. Play with some numbers. If you want to kind of like go the other direction and say like, I don't even want to think about numbers, bring $100 cash to the grocery store. You'll have a really good sense really quickly and you'll do better math than you ever have in your life to be like, I have $100 and I've left my wallet at home. Is this a normal shop for me, or does that feel like I can't get the things I want to get? You can play, put a little bit of curiosity and play in your finances. And the third thing is just start taking notice of the annual expenses that come in. So we could sit here for the next 2 hours and think about every annual random expense, and we'd still forget some. It's okay. I encourage you to be like, don't be frustrated by that. But when something surprises you, be like, haha, you've got me this time. But you shall not get me again. So being like, okay, now I'm going to note it. Now I'm going to try to make a plan for how I can do that, kind of prepare for that in the next year. We'll talk about how to do that in a little bit. But just kind of, I'm going to factor that into to the side of my life. So get started, start working on those kind of things. That's this idea of where to start with the what do I need? I saw one question pop up. Donna, is there anything that we want to kind of roll over? Okay, I think we're okay.
People are just asking to see the link again in the chat. So I just reposted it.
Oh, thank you so much, Donna. Great. So again, next thing to work on. So first thing, what is my money for right now? That like top 5 list, this idea. This is a really cool thing to bring into as you're thinking about your expenses. If my money is really for family or stability, how does that relate to how I'm using my money? Curiosity, not judgment, just kind of like recognizing and saying, oh, that's interesting. How do I kind of do this? Then start building the sense of what do you need to run your life right now? Going through all these piles and putting things where they belong and kind of giving yourself your average cost of your life. So the next big question we want to look at is the question, how do I fill that need? So I have this need I've set up for like $3,000 a month. How do I fill that need? And so then we start wanting to look at the income side. But before we talk about income, we need to talk about everybody's favorite topic, taxes. And the reason we need to talk about taxes is that just because you make $3,000 or $4,000 in this example, doesn't mean you can just go out and earn $4,000 because of the magic of taxes. For lots of us who make self-employed income, one of the most kind of like things that we'll notice on the ground, the clearest is the difference between self-employed and employed income for us is that often with employment income, deductions are taken off its source. So you're frustrated because you get a much smaller check, but you don't have to worry about tax time in the same way as at self-employment, where you get the whole check and it's up to you to figure out if you have to take something off for tax and how that all works. So I want to talk about taxes a little bit. I want to talk about some fundamentals of tax, but I don't want to get too, I'm not an accountant, I'm a financial planner, which may seem like it should be the same thing, but I don't file taxes every year. So there's going to be some specific things that I may not be able to answer, but I want to talk about the fundamentals, get a general sense, and kind of get a few habits that I really want you to start thinking about it. So one of the big things to think about, and actually before I talk about the point that I just kind of put up here, the biggest thing I want you to take away as we're talking about all of this stuff is if you make self-employed income, I want you to start a habit of some of this money is not my money. And I'm going to take it and I'm going to put it somewhere else and it's going to live there for the government. When I say put it somewhere else, I literally mean like put it into a separate account. So a separate savings account. Call that account taxes. Don't forget about the number 20% right now. Just call it taxes. Put a number over there every time. If you are a person that knows that if it's in a tax account, a separate savings account next to your checking account, you will spend it, put that savings account with another bank, put it far away. Practice this idea of putting money aside. Even if you're somebody who's like, I usually don't have to pay a lot of tax. One of the things I see most often, especially in the arts, is, you're used to maybe paying a certain level of tax, or your kind of employment job covers it. And then all of a sudden you get a really good year and you're not used to putting something aside. And remember, more money amplifies current behavior. So if you're doing zero, more is probably just going to mean you keep doing zero. And then all of a sudden you get hit with this big tax bill. And all of a sudden you have to pay off last year's tax bill and this year's tax bill at the same time. It's a huge source of stress. So what you can do now is start the habit of putting something aside. It can be $1. Every time I earn money, I put $1 aside into the savings account. Because if you earn more, all of a sudden you'll be like, oh, I'm used to putting $1. I should probably put more because this is a higher. You have the habit. You have something to amplify with more. So more important than anything else we're going to talk about today is form that habit. Have the sense of, I make self-employed income. I put something aside for taxes every time. Now, for the rest of you, you might think, okay, that's lovely. Habit, got you. But how much should I be putting aside? And this is a question that I feel like I should be able to answer better, because I should just be able to say, if you make 40,000, put this aside. If you make 50,000, put this aside. But it's a little bit more complicated than that. And I'm going to use this as an excuse because, it's everybody's favorite thing to learn more about taxes. So I'm going to use this as an excuse to talk a little bit about the fundamentals of taxes and really trying to be as boring as possible. And hopefully kind of maybe clear up a few things that some of you have an idea of, but isn't quite as clear, because I sure didn't have this idea. So the first reason why it's
there's
yes.
a couple of questions. Someone is asking, this is only if you make over a certain amount of money a year. Is that correct? And then another person wants to know if this also applies to grants.
Question is, the first one, what you're thinking of is HST. You have to pay income tax on everything, but there's rules around HST and GST that we'll talk about in a second, where there's a specific income threshold. So no, if you make any self-employed earnings, whether that's $500 or whether that's $50,000, they can be taxable. Yes. So I would say if you make self-employed income, I would say put aside a small amount no matter what. Yes, that would be my answer to that question. And the second answer is, yes, it applies to grants. And again, I'm going to kind of move that down the road just a little bit, and I'll make a note for myself to talk about grants in a second. I want to introduce just a few other concepts, and we'll talk about why grants, it can feel like sometimes they don't add to our taxable income, but yes, they are in the mix when we start talking about taxes and potential income. So unsatisfying answers, but hopefully I'll be able to come back and give you some better clarification in a second. So the first thing I want to talk about briefly, in the sense of like why it's a little bit tricky to think about how much we would take off for our taxes, is because we have something in Canada called the marginal tax rate, or we have a progressive tax system. So it's a marginal tax rate system. Now, again, I can see that this is like terribly boring things to think about, but in general, the idea is this: we have these like buckets that have different tax rates. These are our margins, but just kind of think of them as buckets. So I've simplified things a little bit. This depends on provinces and all the things, but I'm just trying to think about the general ideas here. So in our first bucket, from 0 to 49,000 here in Ontario, combined taxes around 20%. Our second bucket, 49,000 to 53,000, 24%. That goes up as we go. So we have these buckets. So it's tempting to say like, okay, Chris, if I was making $52,000, I would be in this bucket, and therefore I would pay 24% taxes. And this is how we often think about it, because sometimes we say, oh, I don't want to make 54,000 because I'll end up in a higher tax bracket and I'll end up paying more taxes in general. And I just want to nip this in the bud a little bit, because that's not actually how the tax bracket system works. What actually happens is it works a little bit more like this. Kind of imagine them as buckets that kind of flow over into each other. So when we pour our $53,000 of income, everybody's first block of income goes into the first bucket. So your $0 to $49,000 goes into the first bucket, no matter if you're making $300,000 or you're making $40,000. But when we hit that 49,001, that dollar flows over into our next bucket, which is this like 24% bucket. And if that one, if we just over 53,000, if we made more, that would flow into the next bucket. So it's not people that go up and down these brackets, it's dollars that go up and down these brackets. So just rest assured that if you earn more money, that extra dollar may be taxed at a higher tax bracket, but it won't mean that all your money gets taxed at a higher tax bracket. So that's just like one thing to know about the fundamentals of tax. But you can look at this and you can say, well, Chris, you could still do a form, like figure out like, oh, if I make 53, it would be somewhere in between this amount. How much should I be putting aside? But the other thing that makes this a bit complicated is deductions. So deductions and write-offs, something that we throw around a lot, but I think that there's sometimes a fair amount of confusion about what they actually are. You know, we talk about them a lot in terms of free money and being like, oh, don't worry, I'm writing off this dinner, so great. But what a deduction is it means that for those of us that are self-employed, the government looks at the money that we make and they say, well, actually some of that money you needed to spend in order to make your money. So let's say you're making $30,000 in the year, but you're spending 5,000 of those on coachings and lessons and materials for your craft. Well, you're actually allowed to take those things and deduct them from your income. So we made 30,000, but we can subtract 5,000, those are our deductions, and we'll only be taxed at 25,000. So what deductions do is they lower our taxable income. They are not free, but they're tax-free in a way. So they lower our taxable income. And that's why it can be a little bit complicated to say, all of us here could be making $40,000 a year, but you could be having 15,000 of deductions, and I could be having 1,000 of deductions, and Donna could be having $4,000 of deductions. And so all of us would have a different taxable income. And so it can be a bit tricky to figure out exactly like, what is our taxable income actually going to be? So here's a few things that you can kind of think about when you're trying to figure out like, how much should I put aside? Again, in the context that the most important thing is the habit. One thing that you can kind of think about doing is using last year as a guide. So if you're somebody who's like, I earned $45,000 last year and I paid about $8,000 in tax, 18% might be a good thoughtful number. If you feel like last year might be kind of close to this year, because I know that's not always the case for lots of us who work in the arts. But last year's a guide, one way that you can do things. Another way you can do things is something I call fear saving. That's using your fear of the CRA, the Canada Revenue Agency, to save way more than you need, to trick yourself into actually saving up something that when you come to tax time, you won't need to use all of it for taxes, and then you can have this lump sum that you can use for something else. It's a lovely idea if you have extra money to save for taxes. So it doesn't work for everybody, but it can work in the right situation. The last thing that you can do is that you can think through the upcoming year and play around with a tax calculator. I know nobody's favorite thing to use the words play and tax calculator in one sentence, but let me show you a little bit of what I'm talking about here. So this is one that I like. Oh, Donna, do you have a question?
Yeah, there's a couple of questions that I think apply to what you've just been speaking about.
Sure.
One is there a cap on how much you can legally claim or deduct?
No, like you can't make, your income can go to zero in most cases. And now different deductions act different ways, but you can, if you earn 5,000 and you have $5,000 of deductions, you can claim like a net zero as far as income and not a taxable income. There's not any specific number as far as like, you can't claim more than a percentage of your income, or you can't claim more than $15,000 of deductions. There's some restrictions that are specifically deduction, depending on the deduction. Here, let me just kind of pull up some examples here.
And
this
then
is
the next question.
Sorry, go ahead, Donna.
The next question sort of bookends directly with that. It says, do you need to have a certain percentage of your income coming directly from the arts in order to write off things needed for our art form? Example, things like acting classes or headshots, etc.
Yeah. So in general, the way CRA defines a business is not, it's the intent to earn money. It's not necessarily earning money. Now, there can be a little bit of complication around there depending on whether CRA considers something like a business endeavor or a hobby or things like that. I can't speak to that gray area specifically, but it's not specifically related to, I can't write off things if I'm earning 5,000 or 10,000 or something like that. The language is more about your intent to earn money with this craft. That means that the CRA sees you as a business, as a self-employed business, and then you can you can do deductions. So that doesn't fully answer your question. If you feel like you live in that gray area, that might be a question more specifically for an accountant, just with your own personal situation. But as far as your overarching question of, do you need to earn a certain amount? No, that's not the way that they're looking at things. I want to pull up I'll pop into the calculator in a second, but these are just a list of potential deductions. This is not meant to be like you can deduct all of these for everything, but just to kind of like let you know what you could potentially deduct. These are some things that you could that you could potentially deduct. So you can see things like accounting and legal fees, agent commission, things like concert and theater tickets, depending kind of on the situation again. Things like professional development in classes, instrument rental or gear or costume rental specifically for shows, software and apps potentially. So one of the things I wanted to kind of talk about, so like internet and phone, you can deduct a percentage of those things. Some of those things are maxed out at a max of 50%. Same thing with some restaurant and eating out costs. You can only deduct a maximum of 50%. So some of these things have specific rules around them. Some of these things are gray, and they use a lot of the word reasonable. And so here's a kind of way to think a little bit about when you can deduct something. So first rule of deducting something is, do I have a record of this purchase? So the CRA wants you to be able to tell the story of the things that you deducted to them using kind of a paper record. So that could be a receipt. It could be something from your teacher that says, I did lessons on this date and this date and this date, and this is how much it cost, and this is me signing at the bottom. So a record of the purchase is the first thing. The second thing is the word reasonable. The amount of times the word reasonable shows up in the tax code was a fairly big surprise for me. And reasonable is tough because somebody else's reasonable may not be your reasonable. Think about whether you could sit in front of somebody that knows nothing about your craft and explain to them why it was an important thing for you to do for your business and for your craft. Can you make that case? That's a good place to start. If you know pretty quickly, I think we've all been at dinners where somebody said, your dinner with good friends, and then they mention the fact that they have a show next week and they say, we talked about business, so I'm writing it off. I think that may, for me, not pass the reasonability test where, different things I might go like, no, I can really make the case for this, and this was really important. 3, if it's not 100% for business, you probably can't deduct 100% of it, but you might be able to deduct a portion of it. So those are things like your phone bill or your internet costs, or even like maybe even a home office or home studio portion of your rent. These are all possibilities. This can actually exist as well as for travel. If you're somebody who has to audition by traveling, but then you spent a week there kind of visiting friends and family, maybe you can deduct a portion of that, but not the whole thing. So again, go back to number two about being reasonable. And the last thing is, if you're not sure, ask for help. There's a lot of kind of resources as far as there's the CRA helpline, although I will be fair, they make a fair amount of mistakes with self-employed things. So maybe call twice if it's something that's really important. You can work with an accountant if that's something you can afford. There are people that work specifically with the arts community and can really have a sense of what's going on in this community and give you a gauge of what's normal and what's not. Even places like TurboTax, which is a software, have people that you can call and interact with and ask questions to that can give you some guidance. Don't put the responsibility on yourself to understand all this stuff. It's constantly changing. There's lots of gray areas. So just ask questions and don't feel like you have to know it all.
Chris, we have a question.
Yes, please.
Can a credit card statement serve as a receipt if you've lost your receipt?
Not as far as everything I've heard from the CRA. So bank statements or credit card statements are not receipts. They don't kind of show enough information. They want to see a specific receipt or kind of like proof of purchase. That's what I've heard from the CRA. That's kind of the last thing that's been my impression. So not as far as I know.
And then another question, I think you've answered this, but just to confirm for this person, actors are under the category of self-employed business. Is that correct?
Yeah, we are. Actors and dancers, and basically, anybody, if you're trying to make self-employed income, they call you a business, whether you call yourself a business or not. You don't have to register as a business for the CRA to see you as a self-employed business. Those are similar things in the way we're using it. It doesn't necessarily mean that you're incorporated or have a business name or all these things. The CRA sees you if you're making self-employment income or endeavoring to make self-employed income as a business.
And I think the last question here is, are deductibles only for people who are self-employed?
Generally, there's it's a self-employment thing specifically. So employees, this is less my specialty because I work mainly with self-employment folks. There's way fewer things. There might be a one or two kind of things that you can look at that might be deductions or tax credits. There's some things, those are more tax credit things. Sometimes there's things for some family things. There were some things during the pandemic that they extended around a few kind of expenses, but in general, not the kind of expenses that we just went through. We're talking about self-employment income specifically. Yeah, I just kind of received a note that I know that there is a mix between kind of self-employed employees kind of within the general equity family. So that's an important distinction to make here in terms of what's possible and what's not. Generally, we're talking about self-employment deductions. Okay, how's everybody doing with the tax stuff? Full stress? Half stress? Okay, I'm gonna flash up one more thing. We're talking about playing around with the tax calculator a little bit because, why not just add a little bit of extra stress? I'm gonna pick my own province here because, but you can pick any province. This is a simple tax calculator. Again, simple means a little oversimplified, but it can give you a general sense of what you could owe. So if you want to play around with this idea of being like, okay, what if I made $40,000 of self-employed earnings? Now, one thing I want to just kind of note here, this is $40,000 of taxable. So this is after we take out all those deductions. This is the number that we're kind of actually getting taxed at. What could I pay in taxes? And what it'll show you on this side is what that potentially could be. So we have about $9,000 of tax. That includes kind of federal, provincial, CPP. And here at the bottom, what it'll give you is an average tax rate for this whole amount. So if you thought that you were going to have about $40,000 of taxable earnings, somewhere in the realm of 22% might be a safe amount to start with. So this, again, is just a way to kind of give you a sense of what should I kind of think about deducting, or how could I think about deducting, or any of these things. Simplified, but just another way to get to that number of how much should I take off. Okay, reflections. Anybody have any more general tax questions? That's kind of the general fundamentals, although I want to talk about one more thing, which is specifically around GST, HST. Donna, were there any other questions that I want to talk
yes,
about?
there is a great question here. Can you talk even more about when you know that you're self-employed versus when you're employed by a company?
Ooh, it's a really good question. And actually it's a question that there's considerable resources for, because sometimes you can be hired as a contractor by a company, but the CRA will actually see you as employed. So they have a kind of a matrix method. No, I've completely blocked myself here. They have a way, like some of the questions that they ask about when are you employed. I don't have them specifically at the front of my head. Metric totally works, Paige, thank you. For figuring out when are you employed or when are you self-employed. It has to do with, it's just not at the front of my mind. What I'll do here is I will look up that resource and I will send it to Randy and the team at Equity, and they can kind of pass out that somewhat afterwards. It's a really good question. The first place to ask is your employer. Are you hired as a contractor, or are you hired a contractor with being self-employed, or are you hired as an employee? If you're getting deductions taken off its source, that's evidence towards, potentially them looking at you more as an employee, but it's not a done deal in that sense. So ask your employers a good sense, and I will look for employee, self-employed. I want to just find the CRA resource, and I'll send it over for you so you have something to kind of look at a little bit and how they think about those things. Really good question.
This section has created a lot of questions, so I'm just going to throw out them as we go. One says, what about if you earn income in a different province from where you live?
In general, you're taxed, in general, you're taxed in one province. So it's the province that you live. So things kind of come back to where you are. Now, there's a slight thing when we talk about, maybe it'd be a good idea just to move over for a second and just talk about GST, HST, because this matters a little bit in your question, and then we can go back to kind of the rest of the tax questions, then I'll be done introducing new concepts here. So HST, GST, it's the same idea depending on the province that you live in. Some provinces call it HST and it's a different rate. Some provinces call it GST. For our general definitions here, it's the same general rules. So this is where, when the question came of earning a certain income, needing to think about charging an extra tax. So there is a thing that exists called GST or HST. We pay it on our coffee, we pay it on our lunch out. And the government looks at us as service providers and says, at a certain income level, they want you to start charging GST or HST on the services that you provide. When is that? $30,000. If you are earning $30,000, not within a calendar year, this is where the CRA gets a little bit tricksy, it's within a rotating 12 months. So it could be April to April, it can be, June to June. So it's about, have you hit that $30,000 of self-employed earnings? This is just not taking into account your employment earnings, self-employed earnings. And this is gross, pre-deduction. So if you've hit that amount, they want you to register for a GST or HST number and start charging for that amount. So basically, if you're doing a $100 gig in Ontario, you would then be charging $113. So $13 for the HST and $100 for you. You'd be responsible for doing that and then taking that HST, putting it aside, and remitting it to the government at the end of the year. So it's another thing to file. So a little bit of extra work. How this ties back into the question kind of which province is that the rate that you charge depends on where the service is delivered. So if I was working in Manitoba, Manitoba has a GST rate of 5%, he says confidently. So I would charge 5% on that and I would collect it. So that's the only time when we're talking about like provinces and tax rate where we kind of have to be a little bit cognizant of what we're charging, the GST and HST side. One quick kind of note here is that we want to register. One of the things that is exempt in this sphere is music lessons. So if you're somebody that teaches music lessons, that does not count towards this 30,000. And even if you have an HST or GST number, you don't have to collect GST or HST on music lessons. It's one of the weird times that musicians have a shout out in the tax code. Super fun and slightly complicated. So if you think you're here, what you have to do is just kind of call, get that number and kind of start doing that. This can be a major stress for a lot of people. If you have the habit of when money comes in, I put this money aside, HST, GST will be fine. You get paid, you take that GST or HST, you put it into a tax account, you don't think about it as your money. Where people get into trouble is that they do it, they get paid more, and then they spend it, and then they get hit with that extra bill at the end of the year. So that's where that extra stress can come in. So build the habit no matter what, and start rolling with that.
Okay, we've got a whack of questions here.
I'll do what I can. Taxes is always a bit of a thin thing. So I'm going to answer what I can, and I'm going to send you on to accountants if I can. Give it to me, Donna.
Super. One of our lovely members says, I pay close to $400 for my artist accountant because I think they know better than I do, but it is a huge burden for not making much money. I'm terrified to do it by myself. So can I ask about paying accountants who specialize in artist tax?
In general, there's a couple of pros. One, you have a tax buddy. And I think that's something you're feeling is that just then, like, you have somebody to ask questions. You have somebody that you kind of like is helping you with this thing. So there isn't the burden of feeling like you need to know everything, and just the practical time that it would take. They're kind of helping you save that time. So that can be a real plus. The other thing that can really help with an arts accountant is that they have a sense, or they should have a sense of like what's in the normal range of deductions in different categories and what might set off a red flag and have the CRA say, hey, that's higher than we would expect. Can you provide some more information? So they can give you some guidance around some of those things and let you know, even if it's true, doesn't mean you can't do it, but just be like, oh, we have to make sure we have good documentation here, because it might, they might ask for more kind of information on this side. So the value is going to be different for everybody in terms of what feels like too much or not enough or any of those things. But hopefully that helps. I'm not sure if that kind of speaks to your question.
Then there's another question. If you haven't filed in a number of years, how much is the penalty? Or if you haven't owed on taxes and haven't filed, what would the penalty be?
So in general, the penalties, there might be some late filing penalties, but in general, the interest, it applies to the amount that you should have paid. So if you don't think you owed in the last couple of years, you could actually be getting some benefits back, because there might be benefits or credits that should have been paid to you that you haven't had access to. It's always really stressful when you have multiple years to catch up on. There's lots, you are not alone, very much so. But finding a way to start getting caught up on those, especially if some of those are lower income years where you might kind of not owe and have some access to some credits or some things coming back, that might be an incentive to say, oh, I could actually get paid for doing this tax return. And it could be a net gain as well. So the late filing penalties aren't as bad. I don't have them on the top of my head, I'm sorry. But it's really the interest on the taxes owed that can really add up over the years.
There's another question. Is there a tax calculator that allows you to play around with different amounts of RRSP contributions to see how it will affect your tax rate?
Yeah, this one actually does that. It's even in the simple one, you can play around with, it's one of the fields that they have. So if we have 40,000 and then you wanted to say, I wanted to put $1,000 into an RRSP, it would show you the tax savings that you would get in that current year. So that is something you can play with there. I'll just drop this link into the chat for you to play around with if it's helpful. Again, it doesn't give you fields for everything, but I like the fact that it's simpler because it doesn't give you 4,000 cells that you have to be like, what's line 420? Anything like that. Next question.
Okay, does it reduce the amount you have to save for tax if you collect HST? Like if you didn't have an HST number before, so you have to take it off yourself. But now that you charge HST, will you have to take off less?
Yeah, it's a good question. I think I'm going to forward that to an accountant in general. I think what you're asking is, before you have an HST number, when you're deducting an expense, you include the HST that you paid. Afterwards, on some things, depending on what we're talking about, you actually take the HST that you paid and you count it against the HST that you owe. So you're just moving it from a column to a different, you're just moving it from one column to the other column. So I can't tell you yes or no. In general, it's not going to change the tax that you're taking off in a significant way with HST. You'll just get paid more and have to kind of count for that extra tax.
Here's another question. Would you put the money you're collecting for GST or HST in a high interest saving account? Or what kind of account would you set it aside in? I would appreciate your advice. Thank you.
Yeah, not a problem. It's always nice. These things are often, sometimes when you get to a certain level of taxes, they'll ask you to pay quarterly, which means you'll pay 4 times a year versus just once a year. But especially if you're somebody who's just paying once a year, putting aside a lump sum of a couple $1,000s in a place that earns the most interest would be a really nice choice. So one savings account that I generally like is there's an online bank called EQ that has a generally not just promotional rate, a solid savings rate. I think it's about 2.5% right now. They're free, no fees or anything like that. It also is a little bit separate from all of your other money. You can link it to your current account and send money over there in a pretty easy way. But yeah, high interest savings account for your taxes completely makes sense. And that would be one that I would consider. There's a couple of online banks like that that have that are free and offer a higher savings rate that you can think about.
And then 2 people have asked the same question. If you are late filing, can you file your years out of order if you haven't filed for many years, or do you need to file them in order?
You can file out of order. The thing is about taxes is it's a bit like think about it like a 4-act play. There's through lines from the previous act. So yes, you can do that, but often numbers kind of carry forward, and depending on situations, it can feel like sometimes it makes sense in some people's situations to be like, just file this year, just like get some momentum, file this year. But the kind of quickest way in aggregate will be start with the first year, because there's some numbers that might roll over into the next year, and you'll know to put them there, and you won't have to kind of redo that stuff as you go. So in order is better for most people.
Excellent. And then someone is asking about the music lessons. Do the music lesson rule apply just for Ontario or all provinces? And also, how do you calculate the 4 terms of HST? Let's say I made 15,000 first term, and then the fourth was over 15,000.
Yeah.
Does that count, or do we restart the count?
So the 4 terms to qualify for the HST side. So like for that $30,000 number, if that's your question, it's cumulative over that full year. So if we're like May to May and you're in $15,000 in the first one, but it is looking at 12 months. So if you kind of peak over that and it's only $30,000 within that 12 months, then you're still underneath that amount. And music lessons, that'll apply to the whole country. I will say there's always a chance that in Quebec it is different. I can speak to all except Quebec. I have not specifically read it on Quebec, so I will not make that statement. Apologies to anybody from Quebec. Makes it all just a little bit.
The last thing someone says here, I picked up some work internationally in the UK. I've kept up with my Canada taxes, declaring everything, but it's getting sticky with filing taxes in the UK as well as Canada. In Canada, I don't have to register as a self-employed artist. In the UK, I have to. Do you know anything about international work? If you don't know, any pointers as to who you could direct me to who might know?
Yeah, international work makes things more complicated. In general, kind of as a rule of just a general idea, you generally get taxed wherever your country of residence. Now, US is an exception. If you have dual US citizenship, your finances are far more complicated than everybody else's. But generally, like, things kind of come through your tax, your kind of place of residency. You might have to file multiple places. I'm not going to speak to the UK side specifically. I've done a little bit of work there, but not enough to kind of have this kind of ironclad rules. You can definitely, this will be one of many times I drop my email into the chat. If you send me an email, I can try to kind of connect you to a few people to talk to potentially for some international stuff. I have a couple of people that I work with that split between the UK and Canada, so I can see if I can kind of send you some resources there, but I don't have them on the tip of my tongue.
And that's all the questions for now.
Okay. Before we leave tax, the big things I want to kind of like leave with here is this sense of it exists. It increases the amount that you need to make. So you need to make enough for you, and then you also have to pay the government. So there's kind of these 2 pieces. Form the habit, most important thing above all, and don't be afraid to ask for help. Those are kind of the big things to take away from if you're feeling completely overwhelmed. It always feels like whenever in these tax things we get super micro, and that can become a little overwhelming. So form the habit, most important thing. Start playing around at the right percentage to set aside for all self-employment earnings, and kind of build from there. Okay, so next thing we kind of want to talk about. So we've talked about what's your money for right now. We want to talk about, I just kind of saw somebody mention that I did drop my email into the chat. I'm not sure if everybody sees it or not, or if my messages aren't coming through. Donna, do you mind just posting them as well?
Yeah, it's there, but I'll do it again.
Yeah, maybe I'll post a couple more things over the next little bit. And so if you could just repost them right away.
Yeah.
Oh, you know what? I figured out why. I fixed it. Sorry, everybody. So we talked about what's your money for right now? Financial success. We talked about what do you need? And then we talked about taxes and how that fits into what you need. So now what we can do is we can look at the income side of things. And income is really hard because I guarantee that there are lots of different forms of variable income in this Zoom webinar right now. Some of you might be people that have multiple incomes, like multiple jobs and like 5 different income streams. Some of you might have one employee stream and like a little bit on the side. One of you might have like gigs that kind of change all the time and kind of book up over the next year. Variable income comes in lots of different forms. So I want to show you 2 ways to start playing around with how to wrap your brain around those things. And hopefully you can find something that's helpful within that. The first one I want to show you is going through the process of mapping out your income. So this works really well for somebody who knows a fair amount about their income, but it's hard to kind of imagine like all the things that could happen, or like some of them are changing all the time. So the way that this kind of sheet works, I've organized it on a spreadsheet, but you don't have to have it on a spreadsheet. You can do it on the back of a poster board. This does the math for you. Is that first of all, we put your income into 3 different piles. So first of all, any fixed income that's the same every month. So that could be like a part-time salary position or a full-time salary position. Could be a government benefit for example, like a Canada Child benefit, something like that. So do you have something that's the same every month? We can put that out. That's the first thing. The next thing we can do is like, what happens every month, but the amount changes. So this is where it starts to get hard to plan a little bit. But what I want to encourage you to do with sources like this is to say, okay, what's the range that I've gotten from these sources? So if you're somebody who does coaching or teaching or something like that, to be like, okay, I make between $200 on a low month and $600 might be the maximum amount. And then kind of mapping those things out. So one thing is that like we can really get, one of the traps is that in the back of our brain, we think about this max and we say, oh, I can definitely make that every month. That's a stressful thing to plan with. So either plan with the lowest amount or really think through in the case of coaching and lessons to be like, okay, I know about the next 3 months because people have signed up, but then afterwards, so I know that the next 3 months will be at that 600, but then you know what? I don't know if I'm going to make new students, or maybe I can use the average amount to make new students, but then I'm going to go away for the summer, so I don't have anything there. And then it starts again in the fall. So just mapping out what you know. Again, be reasonable. Don't give yourself the highest expectations on different things, but say like, what's reasonable? What do I know about my income and how it could come through? You can do the same thing with gigs. So the third kind of category is lump sum gigs, to say like, okay, what do I know about the big lump sum? So if you're somebody that books out over 6 or 8 months, or you know something 8 months away, like on a theater schedule or something like that, you're like, hey, what can I expect and when can I expect it? So one of the big things about thinking about planning for income is not only how much will I get paid, but also when will I get paid? When will I actually see that money? So you can map that out. And then what this helps you do is just to see what the shape of that is. Now, I'm going to take this out for a second and just be like, this is one version of kind of seeing out the income that you can see. And then we have this red line at the top, and that comes from your monthly number. So that's from that worksheet. Be like, what's the average expenses and how am I coming to there? Same thing over here. We put a tax rate in 20%. So we're taking that into account as well. And we can see immediately, like, here's what I know. And here's the gap. This is what I need to kind of be getting to. So on the worst side, so even if you start seeing a lot of gaps, what this can start giving you is an actual problem to solve. Like, how can I kind of like, where can I bridge that gap? What's the actual amount that I can do? How can I break that down in terms of shifts or coachings or lessons or like the way that I earn money? The other thing that it can be really helpful for is imagining out, like, if you make a big lump sum, just using this as an example, how long will that last? So on the side here, we can see if I make this big lump here, is this extra? Can I use this to like save a big chunk or pay off some debt? We can see on the side, it'll show us kind of how long that money might last. So right now, with about $3,000 of spending a month, we're okay for just till the end of April. So that's the question of, is that okay? Do we know about any other work that's coming in April? We have this runway. Planning will never solve all of the stress of variable income. The hope is just that we can kind of see it coming a little bit, so we have time to adjust. And so in this situation, you could say, actually, that's not extra money. I need that to live over the next 3 months. And I've got to start working on getting money into May or April so that I can like push that green amount out even farther. For some of you, you might be looking at it being like, oh yeah, I know exactly how I would use something like that. For some of you, you might be like, that does not apply to me, or that's not how I think. So I'll show you another way, and I'll drop both of these tools into the chat in a way that you can all see it after I'm done. The other one is to kind of think about an income target tool. So the way this exercise works and this kind of tool works, what we have is we have our 4 piles here. So we have our business expenses, our personal fixed, other monthly, and then our personal annual here. Again, we put our tax rate up at the top, and we can break it down here, but basically what we see on the side is, if I wanted to spend this way, this is what I would need to earn. I need to earn about $4,000 a month in order to have about just under $3,000 for me, about $250 going towards my business and my craft, and then enough to put aside 20% for taxes every month. Then we can look at this and say, like, is this possible? So a big part of this exercise, as we filled out the need side, and now we're looking at income, is how do I balance this? Does this balance? Do I feel like it's possible to make 4,000? Some of you might be like, great, that totally works. Awesome. Some of you are like, I can't make $4,000 a month. So the exercise becomes, how do I balance that so it becomes more possible? And so on the bottom side here, you can start thinking about, again, how do I balance it? First, by reducing some expenses where possible, and really thinking about like specific things that you can change. Not, I'll lower this number by $200 on all those things, but being like, if I did these things, okay, that would lower it to about $3,400 a month. Does that feel possible? And coming back and forth and being like, where does it feel like the right balance between my income lies? That becomes this exercise, because a lot of the time when you don't know about your income, what you're trying to do is just not put all this weight to earn everything you can just to stay exactly where you are. This is reflective of just what you need. It's not about extra debt payments. It's not about extra savings amounts. It's just kind of that healthily treading water state. So coming back and forth and thinking about this is the way you can start thinking about something to try, something to test. Am I spending enough or too much? Am I spending too little? This is where we can kind of start having that conversation. How does that kind of feel? Any questions about that? In general, Donna, yeah, any questions on that front?
Not at this point. People just are excited to get the spreadsheet.
Look at that. Excited to get a spreadsheet. I love it. I will drop those in the chat in 1 second. Stop share. So what these links will do is they'll prompt you to copy these to your own Google dashboard or Google Drive. So it'll be your own copy. That's not going to be everybody kind of having the same collective copy. So you can play around with it a little bit. Hopefully they'll be helpful. Those are 2 ways. In general, it's like if you know a fair amount about your income, the mapper can be a good thing. If you really feel like you know nothing, the target tool can be a good way to think in balance. But put what you know, use that expense spreadsheet, and then kind of balance it out between the 2 of those things, using your average numbers to start. Now, once we have that kind of balanced number that feels okay, it's still really not perfect, because when we start to zoom in, a balanced year can still look something like this. And let's play a quick game that I like to call Find the Stress. There, yeah, definitely some stress there. We haven't solved the problems because we've smoothed out all the income independent and pretended our expenses and pretended like it's $3,000 a month every month, which is not the case. And we've also kind of compared it to, especially on the target tool, this idea of making like a $4,000 a month, like that's how your income comes in. So we need to talk briefly about how do we make this balance work when both the variable income and expenses are variable. So there's 2 things that you can kind of do that can help in this kind of situation. One is, as we talked about, finding that balance between raising income or lowering expenses. Now, one thing I just want to mention here before we talk about the expense kind of smoothing is the goal is not lowering expenses to a level that doesn't feel realistic. It's got to be true. So lowering your expenses to a point, and you might just find it's not realistic to lower them anymore. This is as low as they can come. Then the challenge becomes, what income do I need to create? Where does that income come from? How do I do that? It's okay not to know. It still will really help, even though it can be an emotional thing to see the number. Having the number gives you something to latch onto in your brain and be creative around it, actually try to solve, versus I need to make more, which means I need to take every single job that comes my way for the rest of eternity, and I can never afford to say no. Creating some numbers can really help you see the pathway to that place where you're like, no, now I have enough for now. And I can say no to that gig I really don't want to take, and kind of start creating some of that freedom that can feel very hard to do in the arts world. So one of the big things to think about is, can we stop waiting for the big annual expenses to crash into our expenses? So what I mean by that is that if you're somebody that celebrates Christmas, it does happen every year. It's the thing about all major holidays. They tend to happen at a similar time every year, and they tend to cost money. And so at a certain point, we're deciding to be blindsided by them. So what if, instead of waiting for that $300 to happen, we put away a small amount every month, so that when that spike hits, we have that money to use on it? And the reason that I like this idea is that even when it fails, it's still helpful. So let's say you go away and you say, yes, Chris, I love it. It's a great idea. I'm going to do that. But then you get to November next year and you're like, I don't have $300. I have $111. You know ahead of time. You know ahead of time that you have less than you planned. And you can be strategic about that. You can say, okay, well, how can I make this work? It's clearly not going to be exactly what I want it to be. So how can I shift this idea? How can I make this work? So it gives you more information to kind of feel more in control versus just hitting January or February in this example and just being completely drowning in what happened and having to figure out and react to it all the time. On the income side, it's hard to kind of convince people to just pay us out every month. What helps, what's the game changer there, is building a buffer between you and the money that's coming in. So my terrible metaphor here that I really like, even though it's becoming less and less relatable every day, is those cereal dispensers that are in dorms, now only maybe in movies. I don't know if they still have them in dorms, but there's a crank at the bottom. So the idea is that you don't want the cereal to come into the thing and go straight into your bowl. That's a stressful way for life to feel. Income comes in, immediately it has to go to bills. If you have a whole month worth of cereal there, it doesn't matter when you fill it up. It doesn't matter whether it's on the 16th of the month that it fills up. You have enough to have, you can have your breakfast bowl every morning. Building that buffer, really, really important. How much? Use your average monthly number. Building up that 1 month buffer to start with is a game changer in terms of how variable income feels. Now, some of you might find that you actually need to build a bigger buffer. Some of your dry spells in the summer or in the winter, depending on the art form, might be 3 months long. And that might be a place to aim. But even just 1 month, all of a sudden means that when money comes in, it doesn't have to go directly into service. There's this space between that. And again, even if it fails, it's still really helpful. So let's say you fill it up, you're using it this month, and then next month it doesn't fill up completely. Well, then you know that it's going to be a month that you have to really look for some cuts and be like, okay, it's a beans and rice month this month. Okay, how can I try to get through that? You know, ahead of time versus feeling like you're scrambling in the moment. You have something specific to kind of aim for and fill up on. Does that make sense? Anybody have any questions around that?
We look good.
Okay.
No questions.
Losing everybody or totally makes sense. So that's kind of the things to aim for. Now, the last thing I want to talk about, so we talked about what's your money for right now. We talked about what do you need? We talked about taxes and how that fits into there. We talked about how to fill that need, build income goals, map out income. The last thing I want to talk about is, what are the tools that can help? So how do you actually stay accountable for this idea? So we talked kind of in abstract a little bit about this idea of building a buffer and putting money aside, but and having this balance, but how do you day to day know if you're within the balance? And this is where we start looking at budget tools or these kind of systems that I think often we start with and then get really frustrated that they don't work immediately. But if we kind of have some thoughtful kind of numbers to put into it, now we have something to test. And for me, the system that works really well is based on the old school envelope system. So this is a system that's been used for years and years and years and years and years. My dad used to use it, this idea of like cash in jars or envelope. You know, I have an envelope and I write food on it and I put $200 in it. And when I'm done, I either need to move from another envelope or I don't have money for that thing. It's a lovely idea that is generally impractical for most of us living in a world that's not just cash only. But we can take the idea and we can live that out in one of two ways, or two ways that I want to talk about today. One is you can use an app. There's one that I really liked that I'll kind of show you. And then the other one is actually to use bank accounts to separate out your money. And this can be really helpful for a lot of people that are not spreadsheet people, that are not track every dollar people, that are kind of looking for a bit more of a general, more tactile way to sort money. We can use bank accounts as our envelope. So I want to show you an example of what that could look like. Not necessarily you should do exactly this, but like get your creative spark firing and kind of show you what it maybe could look like. So this is an example of an envelope system using accounts. Let me give you a tour. There's a lot going on here. So first of all, we have two kind of blue teal boxes. Those represent, instead of having one main checking account, having two main checking accounts. One that you just have your bills coming from, and one that kind of holds all the other monthly spending. So remember when we sorted our piles in like 4 big piles, fixed expenses, other monthly spending? Those are the two piles that we're looking at. And this is why some people really like it. One, we know what our bills are every month. So that money's kind of already spent no matter what. So if we could throw $2,000 into this account and say, this is bill money, it's spent, I don't want to look at it. That can kind of all just automatically happen in the background. And then what happens here in the separate spending method, we can utilize a skill that many artists have, which is when there is money, we spend it. And when there isn't, we somehow make it last for way too long. It's like the end of the toothpaste tube. So this is the money that's for food and going out and takeout and transportation. And the goal is you can spend it to zero every month, but that's what you have. That's what you have to work in. And you don't have to worry about accidentally spending your phone bill or having one of your bills bounced because we've separated out the two of those things. So that's the general idea. And then we can build off of that and have a bunch of savings accounts for those annual goals, those less frequent goals. So this is when I was talking about setting aside money for like holidays or something like that. You can have a separate savings account for it. You can nickname it specifically and have these different pockets that you can use to, when it's possible, put some money in for those annual expense things to come out. So it could be about vehicle or travel. And the reason I really like this is that not only is it a bit more specific, it really gives you good permission to spend. It's not only like a restrictive thing, it gives you the permission to use money for what you want to use money for, which is sometimes hard when you have everything in one checking account or everything in one savings account, because you're like, I don't know what this money is for, and I have to feel bad every time I spend money from it. So by separating out money a little bit, you can create some permission. And also you can create a really great framework for making trade-offs. So here's what I mean. So let's say you're out doing some clothes shopping and you want to buy some new jeans for $100. You look at your clothing account, it's only $60 in there. Okay, so where is that extra $40 going to come from? I could either not get the jeans, or I could move it from gifts. And I can say, okay, well, am I okay with that trade-off? It means I'm going to have less for that. Do I want this more? It gives you something to choose in the moment versus just the amorphous blob of the thing in front of you and a general sense that you should be using it for something else in the future, which is a really hard thing to kind of put your finger on. You know, we really separate these things out. So for some of you, you might be looking at it and being like, I like the idea, but how am I going to do all these accounts? What about fees and all those things? So fees are a factor with this kind of system. If you like this idea a lot, you might want to consider some of the online no-fee banks. Two of the kind of most popular ones in Canada are Simply, which is owned by CIBC. So you can use their ATMs, but generally only online. So not a lot of like bank teller going into the branch action. That's one of the trade-offs you make, but no fees on any of their accounts. You can open multiple checking accounts, multiple savings accounts, all that's free. Tangerine is the other one that lots of people use. Again, similar situation, but they're owned by Scotiabank. So you can use the Scotiabank ATMs and do that. You can do this within your own bank that you use right now as well. A version of the system that wouldn't add fees for somebody that, let's say, banks at CIBC would be keep your normal account for your fixed expenses. You can open up savings accounts with these banks. Often they have something like an e-savings account that's free that you can nickname and you can transfer within your bank. that can work quite well. And then for a spending account, instead of having a separate checking account, what you can do is you can open up something like a prepaid credit card. So there's like a company, for example, something called Coho. That's like a prepaid credit card that you can load, and you can use that for your spending account. So that's another thing that you can play around with if you like the idea of riffing on this, but not adding some fees. Those are some options that can come up. Let me show you one extra version of kind of one level back to show you where this envelope system can grow to, not because it's the next step for everybody, it takes time, but just to show you that it's possible to create a system that creates income stability, even if you're making self-employed income. So in this example, what we've done is we've kept our personal side on the right, but we've made a kind of a business side on the left. So what we've done here is we've created, I like to think about it as money choreography. So your money choreography is that you put all your income, it goes into this account, I'm calling it your sorting account, and you separate all your money into 3 piles. Some of it belongs to you personally, calling that your salary account. Some of it you put into a business space, just for your business, and some of it you put aside for the government, the tax space. And what you do here is that no matter if you make $100 or you make $10,000, you separate it into the same piles all the time. The reason that sometimes this can work really well is 1, you have this tax account we talked about, really important government side. 2, you have a separate place for your business spending. This can be great because not only can it create some permission around what money are you allowed to spend on lessons and coachings and materials and things like that, but also you have a different way to spend. So let's say you have your separate debit card for your business account versus your personal account. So when you're in the moment and you're making a purchase and you're like, this is kind of a business thing. So I'm going to use my business debit and I'm going to get a receipt because I'm using that business debit. And you can also use that account to kind of remind you, even though that bank records are not the same as what the CRA needs, you can still use it as kind of like a reminder to kind of go through and say, oh, right, I spent money on that. That's like instead of looking through your entire every dollar that you spent from your main checking account. The third thing is this salary account. So this is where this buffer can live, the serial buffer. So if you've got 1, 2, 3 months of salary sitting here that you fill it up, and then it pays you out a fixed salary every month coming from there. So you can put yourself kind of on a fixed every month kind of salary amount by building that buffer and by kind of sipping that. Now, things have to be balanced in order for this to work, but it's something that can exist and something that I want you to know, is an option for to build as a self-employed person. You can have stable cash flow even if you make variable income. I'm going to pause for a second because I just want to check to see if there's any questions or anything like that. How are we doing for questions?
Actually, we do have a question. Someone said, does it have to be 9 different accounts or can you just do 3 or 4?
Oh yeah, like that's where some people look at 9 and they're like, that's very stressful. Have 1. Some people even have as little as like 1 for just that entire annual bucket. But one thing I'd have you think about is like, what do I want permission for and what do I not? So some people might have like 1 for the miscellaneous, like most things, but then they're like, there's never money for clothes and I always overspend on it. So like, I just want to put $25 in this account for clothes every month. And that's what I have to work with, but I have permission to spend from that. So like, what do you want permission for is a really good way to think about how many kind of buckets you want to create. But no, some people use value statements. So kind of go back to the beginning. It's your freedom account. It's your creative account. You can get general or more specific or whatever kind of makes sense to you.
And then the next question is, what's your take on minimum bank accounts so that you don't pay bank fees? For example, I keep $1,500 in every month and you pay no fees. What do you think about that?
Yeah, so this idea that if you have a minimum bank balance, you don't have to pay a fee, that can be a really nice thing, especially if it's only $1,500. I like the idea sometimes having a cushion. I'm sure many of you feel like having a cushion in the bottom of your account, it means you're not kind of playing jump rope with 0 all the time. So yeah, it can totally make sense. Depends all the time on the fees, the amount of money that it takes, because sometimes they want you to have $5,000 or $6,000 there, and that won't make sense for everybody. But yeah, great idea.
And that's all.
Okay, so let me show you a few more things here. Feel free to kind of keep on layering on questions. If you're somebody that's like, I don't want all those accounts, that doesn't sound like fun to me at all. The app that I really like that uses this envelope system is called YNAB. And I really, really like it. This is the general kind of look of it. Stands for You Need a Budget, which is fun because you can Google I need a budget and it comes up. And if you like the idea of more dollar, like kind of knowing where every dollar goes, a bit more specific, and kind of interacting with your money in that way, I think YNAB works really well. Unfortunately, it's not a free app, but you do get a free 34-day trial. And out of the apps that I've tried, I think a lot of them make you feel like you're tracking. It's a bit like the bank kind of reflections are for lots of folks. Like you look at it and you're like, oh, cool. And then you ignore it. Where YNAB kind of helps you really feel like you're like doing the envelope system, where you're really directing money where you want it to go, organizing things, an active participant and how you want your dollars to be kind of like moved around. So, and it's very much based on this envelope system, and moving money around is really flexible. You can budget in multiple months in the future. It's a really helpful thing to kind of look at. So those are the general tools that I would recommend. And on the top of this, because I know we've talked a lot just about kind of these fundamentals, but on the top of these fundamentals is where we can start doing things like saving for the future, or paying off debt or something like that. I think debt, it's one of the similar problems, but I think it's more acute sometimes with debt. And some of you may have experienced this in your lives, that we can kind of get caught in a bit of a cycle. And it goes like this: is you get the debt and you work really hard, and then you put all the money onto the debt, and then you have no money left. So you have to use your debt again for your bills. And so what I want to encourage you kind of within this vein of what we were talking about is, if you have debt, the same thing with savings, when you like put a big chunk into savings, then all of a sudden you have to claw it back for yourself, is that really think about the source first, fix the source, and then build off the top of that. So if you're somebody that has debt, especially credit card debt or a line of credit debt, the first thing I want you to think about is like, where does that debt come from? Is that always the ticket home during the summer? Or is that always like, I never have money for my lessons, but I always spent, like it always end up being, a certain amount per year? Or the variable income thing just is a killer for me. First, focus on putting that tool in place. Work on the buffer. Give yourself a clothing fund or a travel fund. Give yourself a tool to kind of say, I'm resilient to taking on more debt, or I'm resilient to kind of adding debt. And then once you've kind of like built up some resiliency, start paying off that debt in a one-way fashion. It'll take longer in the short term. You'll pay some more interest in the short term, but you won't necessarily feel like you're caught in that cycle all the time of just being like, just everything is going towards that debt, or everything's going towards savings. Build out these kind of more short-term, year-long things. Really think about what you need. Give yourself those tools, and then build on top of that. That's kind of the core of what I want to talk about. I can always talk about more, but I want to kind of open it up to any specific questions that we haven't addressed, or in general, kind of things that we didn't talk about that you're curious about. We still have 10 minutes or so that we can kind of look at addressing any of those things. So just kind of opening it up a little bit for any questions or things that you want to talk about.
Well, we have a tax question.
Shoot.
It says, if I'm away on contract, paying rent for the place I'm staying at, not including my home base, is that a partial deduction?
It's my understanding. Again, I'm going to give a little bit of a double check with an accountant, but if you have a second home, yes, there's some deductibility there. If you have no home base, if you're a floating artist for the moment and you have to live somewhere, but if you have a second home, yes, my understanding is that there's some deductibility there for sure. It's at least a very good question to ask a tax professional, because I think
Another person says, to clarify, do the things on the list of 4 categories include everything we can deduct as actors?
So when we're talking about the 4 categories, with those like 4 buckets of expenses and like that business, that's a great question. And I should have mentioned that, because it's impossible to have a completely clean system within these 4 piles, because what we just talked about, these like 50% deductibility things. So like if your cell phone is 50% deductible, does it go in the business pile? Does it go in the fixed expenses pile? How does it work? So don't stress too much about making the perfect tax system, because that's, in this kind of world, it's not going to be possible. One, make sure it only goes in one pile. The most dangerous thing is if you add it to multiple piles and you're counting it twice and your number's higher. Just put it in the bucket that makes the most sense. And that might be different. I like to use the framework of, would I have it if I wasn't like a singer? So for me, headshots went into the business pile. A cell phone went into the fixed expenses, because I would have a cell phone no matter what I did. And then kind of keeping track of it that way. But as long as it makes sense to you, put it in whatever pile makes sense.
And I think those are all the questions we have, unless there's someone else that has. Oh, wait, a big one just came in. This one says, I have a fairly specific question regarding the new first home savings account launching this year.
Sure.
Initially, I was excited by it, but when I dug deeper, I learned you cannot use FHSA in conjunction with the home buyer's plan. You have to pick one or the other. For those of us that already have more robust RRSPs and are looking to buy in the next 2 years, let's say, my perception is that the FHSA is not useful due to the $8,000 a year contribution limit.
Yeah.
In this case, my perception is the home buyer's plan would be more powerful to utilize. Am I on the right track with this?
Yeah, Bradley, you're totally on the right track. I think what you're noticing here is that even if you could move money over to the first home savings account in the next 2 years, the maximum amount you could do was 16,000, because 8,000 per year. So if you want to use the full amount from the home buyer's account for your RSP, likely that's going to be the best window for you to do, because you can't use them both. So if you're depending on that full amount, yeah, you're definitely on the right track there. So I'd say affirmation to you, and sorry for everybody if we got a little technical there. But in general, since Bradley brought it up, there is a new account existing. It's called the First Home Savings Account. If you're looking to buy a home in the next period, I would read about it a little bit. It's a brand new kid on the block.
Everybody's saying thank you so much. People are saying it was affirming. Someone actually says, I'm already doing your suggestions.
Excellent. The last thing I'll kind of add here, and feel free to, again, keep on adding questions if it's helpful, is if you're ever looking for just kind of another kind of questions, my email, I'll kind of add it to the chat one more time. I also do something called, I do free office hours on my site, Regs to Reasonable, that you can sign up for, which are just half an hour Zoom calls. So if you're ever interested in kind of like chatting through something or kind of talking more about a question or anything like those things, you can always sign up for half an hour call there through Zoom. So it's for anybody anywhere, and they're free and no strings attached. So feel free to reach out there if it's helpful.
Well, that is great. I just want to give huge thanks to Chris today for his clarity and his generosity, and most importantly, his enthusiasm. It's just so great to have you break it down in such a way that makes us all feel capable and excited. So many great ideas and strategies and tools to inspire us in our financial literacy. So thank you. Huge kudos to our ASL interpreters, Amanda and Cynthia. So thank you to them. Great work. And mostly thanks to all of you, our participants, for attending. We can't do this without you, and we really hope that we're reaching into areas of great concern and interest for you. And a reminder, if you missed any of our previous workshops or part of this workshop today, you can always check them out on the Equity YouTube channel. This will be posted probably within the week, I suspect. And there's a wealth of incredible ones to watch when you get tired of binging Netflix. And also thank you, and please provide us with your input and any thoughts for future workshops. So thanks a lot. And again, huge applause to Chris. Bravo. Thank you. Take care and keep safe, everyone.